Paul, very nice to have you with us, executive editor, of course, for the markets team in Asia. Paul, let's start with what's happening over in the Asia session and the Alibaba news. How much of a shock is this to market watchers?
Yeah, good morning, Anna. I think that the Alibaba news is the last thing that China's equities needed right now, coming somewhat out of the blue, provoking a very big, 10% move on that stock itself and dragging down the rest of the market with it. This is supposed to have been a pretty good week for China if you think about things. The Xi trip to America probably achieved everything that he'd hoped for. In Taiwan, we had the positive development of the tie-up of the pro-China parties, which makes the election next year more likely to swing in that direction. We've had some decent-ish looking eco data as well, and yet the market still hasn't been responding all that favorably. We have this latest drag, but even before that, some of the companies that were reporting decent-looking earnings like JD.com, even Tencent didn't really catch light. The consumer is seen as weak. And so that's weighing on those markets. They're failing to take advantage of the more favourable macro backdrop.
And Paul, I mentioned the US jobless claims. Is this a US labour market that is now starting to show signs of real and significant cracks?
So I think that really exciting and interesting what's going on the US territory right now. Everybody's expecting this soft landing as being the base case, but things are starting to look a little bit more troublesome. If you see it in the eco data this week, it's been coming in weak. We see it in some of the company earnings. Think about Walmart, think about Caterpillar earlier on with some warnings about negative outlook as well. Some of the companies are showing signs of weakness, and I think that there's a risk that suddenly this glide path to that soft landing, it looks a little bit more like a nosedive.
Yeah, and the Cisco numbers certainly weighing on tech, which had been doing OK in the month of November and leading something of a stock rebound. Paul, let me ask you about the oil story. I mentioned we're at 77 as the handle on Brent prices. We've seen 4 weeks of negativity then for oil prices. I suppose all it might take is a change of policy from OPEC+, but for the moment, is the direction of travel negative?
Yeah. And I think oil is another telling sign. In this narrative, the slowdown in the economy is starting to look troublesome everywhere, right? This weakness, it does talk to the supply picture, but it also talks to the demand picture. We're starting to look a little bit flaccid over in the US and certainly in China as well. So that global slowdown picture and narrative is starting to bear out right across markets. We're seeing it in the lower Treasury yields. We're seeing it, in the fact that earlier in the week, the lower Treasury yields were looking like a positive for US equity markets. The last couple of days, that hasn't seemed to be the case so much. We've seen much smaller increases in the S&P over the past couple of days.